Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Tuesday, May 12th. Profit takers sold early gains and sent the major indices markedly lower for most of the session, but stocks were able to battle back in the second half and finish in mixed fashion despite a lack of positive catalysts. Out of favor for the second straight session, financials fell 1.8%. Financials were actually up more than 1% in the early going, but sellers pounced on the sector, focusing their efforts on regional banks and diversified banks. Bank of America was a primary laggard in the financial sector. Investors were unimpressed by news that the company is selling a partial stake in China Construction Bank for $7.3 billion to a consortium of buyers. Automaker Ford also fell out of favor after it announced a common stock offering that will raise funds for general purposes and help provide for certain union obligations. But the offering is also expected to dilute existing shareholders. Fellow automaker General Motors was dogged as investors become increasingly concerned about whether the company will have a restructuring plan ready for government review by June. Yesterday, GM's management indicated that it is more probable that GM will need to accomplish its goals through bankruptcy. Shares of the Dow component are at their lowest level in decades. Participants rotated out of early cycle stocks in favor of defensive-oriented holdings. As such, industrials fell and consumer discretionary stocks slid. Shares of retailers were also down and will come into sharper focus tomorrow morning when the advanced April retail sales data is unveiled. Meanwhile, consumer staple stocks climbed, healthcare advanced, and telecom and utilities also gained. There weren't any major earnings announcements this session. There was only a bit of economic data too, but it didn't have much impact on trading. The U.S. trade deficit widened to $27.6 billion in March from February's $26.1 billion deficit, which was actually the lowest deficit since 1999. I'm Jeffrey Ham for Briefing.com, and thanks for listening.